You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Bupp has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Bupp.
Hey guys, Kevin Bupp here with episode number 143 of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is multifamily investor, resort developer, and serial entrepreneur Dave Zook. And in today's show, we're going to be speaking with Dave about how he got his start as a multifamily syndicator and quickly scaled from just one single-family rental to more than 2,000 units. In addition to his multifamily endeavors, Dave is also involved in a very unique resort development project in Belize, as well as an ATM investment opportunity. And what I'd like you to take note of in today's call is how Dave has leveraged relationships to help fuel his growth in a major way. In fact, he credits a large majority of his success to those people whom he's surrounded himself with over the past years. And you guys know how that old adage goes, right? I think it's something like your net worth is the average of the 5 people you spend the most time with, or something like that. I could have butchered that, but you kind of get it, right? It's all about your relationships and who you spend time with and who you surround yourself with. And in this call with Dave, you're going to learn the following. You're going to learn how Dave pulled together his first partnership on a 92-unit apartment building in Memphis. You'll learn how Dave was able to bring value to the partnership, even though he had limited experience as a multifamily investor. You'll learn about the process that Dave took to educate himself on real estate syndication and how you can apply the same strategy in your very own business. You'll learn about the power of depreciation and why this was one of the key factors that attracted Dave to real estate. You're going to learn why Dave likes to diversify into various investment types in and out of the real estate niche. For example, as I mentioned, he's currently involved in ATM investments, like, cash machine, like an ATM where you get money out of. Yeah, he owns a bunch of them. Kind of interesting, right? You're going to learn about the unique asset management system that he installs in each one of his apartment communities that allows him to virtually see and communicate with his residents. You're also going to learn about what he would have done differently in one of his first partnerships, given the chance to start all over again, and much, much more. And if this is the first time that you're tuning in the show, and I'll welcome you to our incredible family that we have here at the Real Estate Investing for Cash Flow podcast, or if you're one of the many thousands that tune in each and every week, I want to welcome you back and let you all know how grateful I am that you're here with me, that you choose to listen to our show. And a few laundry list items before we get on to the show with Dave. First one is I have a free 30-minute phone consultation that I offer to everyone that tunes into the show. This is a way for us to connect and talk about real estate investing. I love talking about real estate investing. I love meeting others who share that same passion. So if you want to schedule that call with me, go to my website, kevinbupp.com. On the right-hand side, scroll down 3/4 of the way and click the button that says schedule a call with Kevin, and we'll get on the horn together, okay? No ulterior motives there. I won't try to sell anything or pitch you a program or coaching or anything like that. It's just a way for me to speak with others and connect with others who share my same passion. Also, I've got another podcast other than this one that you're listening to. It's a mobile home park investing podcast. Mobile home parks are my asset of choice, and so I have a weekly show that focuses 100% on mobile home park investing. And for those that don't know, I've been investing for, 17 years now. I've owned hundreds of single-family homes, hundreds of apartment doors, other commercial types of property, and have been investing in mobile home parks for the past 5 years now. And I will tell you that it is by far the most lucrative niche of anything else that I've ever owned. It blows away apartments. It blows away single-family homes. It blows away shopping centers. It blows away self-storage. It really is the best investment vehicle that I have ever seen as far as real estate is concerned. So if you want to learn about it, go to that podcast. It's called the Mobile Home Park Investing Podcast. We've got about 67 or so episodes up right now and full of great information. So go check that out. You can search it on iTunes or Stitcher Radio. You can search it by either Mobile Home Park Investing Podcast or even my name, Kevin Bupp, okay? Some other great news is that we recently launched our Mobile Home Park Investment Partnership Fund, okay? If you have any interest whatsoever in partnering with me and my team on future mobile home park deals, you can read more about our company and this opportunity to work together by visiting our company website, which is sunrisecapitalinvestors.com. Again, sunrisecapitalinvestors.com. And I would love the opportunity to show you why I think that mobile home parks are one of the best kept secrets and how they regularly outperform just about every other type of real estate investment that you've ever seen, okay? Again, I've been involved in real estate for a long time, and I've never seen anything more lucrative than mobile home parks, okay? Learn more about that opportunity by going to sunrisecapitalinvestors.com. And here's another exciting thing that I just want to mention real quick about this partnership opportunity. And this is based on direct feedback from many of you who have shown an interest in partnering with us on deals, but also who have an interest in learning the actual business, learning the mechanics of investing in mobile home parks. We are now offering complimentary lifetime access to the Mobile Home Park Academy for anyone who decides to partner with us on deals. So by doing this, we're allowing those who invest with us a first-hand experience of the internal workings of our very own mobile home park business. So not only will you get to participate in deals with us, but you'll also have the opportunity to learn the exact systems and processes that we use day in, day out in our very own business, okay? So maybe one day you want to do your own deals. And if that's the case, then you'll have all the information, knowledge necessary while simultaneously partnering with a team who has a proven track record, which is us, okay? So again, to learn more about this unique investment opportunity, go to sunrisecapitalinvestors.com. And lastly, guys, if you're in the Tampa Bay area, you find yourself here for work or for pleasure, and you've got some extra time, I would love to connect. So reach out to me, shoot me a personal email. My personal email address is kevin@kevinbupp.com. And let me know when you're coming into town, and we'll see if we can get our schedules to coordinate with one another, okay? So now let's get on to the part of the show that you've been waiting for, which is our interview with Dave Zook. So here we go. Ladies and gentlemen, today on the show, we are thrilled to be joined by commercial real estate developer and investor Dave Zook. Dave is a successful business owner and experienced real estate investor active in both the multifamily space and resort community development. He has real estate holdings that spread throughout the United States as well as overseas. And in addition, he has syndicated more than $25 million worth of real estate throughout his career. He and his wife, Susan, and 4 children live in Lancaster County, Pennsylvania, which is actually only about 45 minutes or so away where I grew up. So I'm quite familiar with that area. So without further ado, I'd like to welcome Dave Zook to the show. Dave, how you doing today?
Thanks. Thanks for having me on the show, Kevin. I'm doing great.
Yeah. How's Lancaster, Pennsylvania? Is it nice and cold up there right now?
It is. It's cloudy. It's rainy and cold. Yeah.
Hey,
not a real desirable place to be today.
And the funniest part about that is, growing up around there, we call it Lancaster for some reason. There's no G whatsoever in the spelling of it. Should be Lancaster, but for some reason, I don't know why as Pennsylvanians call it Lancaster. But anyway,
yeah,
that was always funny.
It goes by several different names. The tourists call it, it sounds quite different from a tourist than it does from a local for sure.
Yeah, and Pennsylvania, I think, is the only state that I know of where people that are born and raised in Pennsylvania refer to it by its initials, PA. I don't think there's any other states where people say, like, I'm from FL, like I'm from Florida, or I'm from GA, I'm from PA. Like, that's so common. More so when someone says, where are you from? I'm from PA, like they're from Pennsylvania. So if you ever hear that, you wouldn't know any different if you grew up there because everyone says it. And about the only other thing I know that I can remember very fondly of Lancaster, driving through Lancaster, is when we would go to the Maryland shore. That's where we would go, like spend our summers, like that's where we vacation. Is we drive through Lancaster to get there is, passing the horse and buggies on the road.
Yep.
You have to, you're out in the country and there's tons of horse and buggies. There's a huge Amish population. And so most of the time the traffic jams were caused by horse and buggies and typically with horse poop in the road. So
that is correct. Lancaster is actually the epicenter or kind of the hub of the Amish community in the United States.
Interesting. I didn't know that. I thought there was one other population somewhere in the U.S. that was larger, but who knows? I know Ohio and a few other states have had pretty large populations, but yeah, that's interesting. Well, good deal. Well, I'm excited to have you on the show, Dave, and just so our listeners have a better sense of who you are and what your background's all about, maybe spend a few minutes and go through your background, how you got into the real estate business, and kind of the things that you're working on today.
Yeah, well, you mentioned the Amish. I actually grew up Amish, and my parents are Amish, and so I was born in kind of into kind of an entrepreneurial family, and my dad owned a modular building business where we manufactured storage sheds, and so he got involved in that right about the time I was born, and so I grew up in that industry and kind of got involved in that, pre-teen, and worked my way up through kind of pretty much in every facet of the business. But I was always from as far back as I can remember, I was an investor. And my dad was a businessman, and he was a real estate investor, but he sort of used real estate as a place to park his money. He didn't really have a real strategy behind the real estate game. And so I kind of watched him as he was doing his thing, and he was self-managing some of his single-family homes that he had locally. And I just, I saw that all going down, and I just wasn't real inspired by that, and I really made up my mind to not invest in real estate. But it was through a number of events that kind of took me down that path. And as a teenager, I soon started investing in my own companies and collected a few of them along the way. Joint ventured in some, started some. It was I guess I was probably in my sort of early to mid 20s when a couple of these businesses kind of started really taking off. And I got hit with after a while, after being somewhat successful and really making a lot of money with some of these businesses, I got started, the tax man started, or really after a while, after being involved in these businesses for a while, I got into kind of a tax situation where I had to pay up. And at the time, I just thought that if you make a lot of money, you got to pay a lot of tax. It's what I'd always been told. And I didn't realize there was another way. So through self-education and reading and running into Robert Kiyosaki and his team and all that, it kind of led me down that path where I found another way. And that's how I got kind of steered into the real estate game.
Okay. And then what was your first foray into the real estate side of things? I mean, did you go buy a single family rental and, become a landlord, or what did it look like?
I did buy a single family home, and it wasn't long after that I realized that, this isn't going to do it for me. I've got to scale. This isn't enough. And so then I scaled up a little bit. I bought a couple 5-unit apartment buildings, and I made all the mistakes. I bought a couple deals that looked good on paper, and then I tried to, build a team around it. And then I got the property management team involved, and then I realized that they were in the wrong end of town, or just the typical mistakes from a non-experienced real estate guy. I made them all, and it was soon after that soon after 2009 that I ran into real estate guys and went on a field trip to Memphis, and that's kind of where it all started. I just got hooked up with a good team down there, and we ended up doing a deal together, and it was so much fun, and it was dealing with really good people. It was so much fun. We just did another one and another one after that, and we've been doing business ever since.
Okay. So those deals that you're doing now, so you moved completely away from single family. I mean, you got into the small multifamily initially, but then this deal that you were speaking of, this first deal in Memphis, was a larger multifamily property, right? And then from that point forward, other than your development projects, mostly everything that you've done has been larger multifamily, correct?
Yeah. So that first one that I did in Memphis was with my team down there. That was a 92-unit building, and from there, right soon after that, I liked the team. I liked my partner. I liked, we kind of just hit it off. And soon after that, I bought a 252 unit. And at the time, I didn't even realize that, there was such a thing as syndication, and that had never even crossed my mind about raising money, from other partners. So I went in, and my partner and I bought the 252 unit building, and that was sort of it for me for right then. I was sort of sort of out of cash. And so it was about that time that I sat in on a startup bank meeting. They invited me to be a part of the startup bank, and I was sitting around a table with these guys, probably a dozen of them, that were very successful business guys, and I knew that they could, stroke a 7-figure check, most of the guys in the room. And so this, some of the conversations going around the table were like, they were debating whether this was a good investment. And the thought was that, well, we may not see a return for 5 to 7 years, but it's better than putting our money in a CD. and I just couldn't believe what I was hearing. And it wasn't long after that I got to think, well, you know what? There's more deals going on down here. There's more deals available, and these guys may be interested in teaming up. So that's kind of where that idea came from. And the next deal that came available, we put it on a contract. I went to see some guys about going in the deal with us, and that's kind of what started the syndication thing for me.
Okay, well, good deal. And so I know before we started doing this call here, Dave, you and I briefly spoke about your entrance into this multifamily game, and I know that the partner, what you had mentioned is the partner that you teamed up with down there in Memphis, was a pretty experienced apartment operator already. And so the big question that I have, that I think a lot of our listeners might have now that they know that tidbit is, what value did you bring to the table, or what value did that large apartment operator, the experienced operator, see in you? Because at that point, you'd only done a few deals, right? I mean, at that point, you'd done a single family deal and a few of those smaller multifamilies, but you hadn't done anything of that size or magnitude. So what value was it that you brought to the table?
Well, I think for your listeners, the important thing, because I get this question all the time, like, how do I meet this partner like you did? Like, how do I meet this guy? How do I really, leverage another relationship? And I think that's the key thing. You said, what value did I bring to the table? And he was having a very similar problem that I was having later on when, he bought 800 units from our broker down in Memphis, and he was tapped out. He didn't have enough of cash to keep on going, but at the same time, he wanted to grow his business. He saw all the opportunities down there. And when I came to the scene, he had just finished an acquisition. He was pretty much like, hey, this is going to be it for me for a little bit, because he was tapped out. So I came on the scene as the money guy in the first deal, and we did the deal together. I brought the cash, and I think for me, it was just showing that I was for real by being able to step up to the table and get a deal done. Mm-hmm. And then the very next deal that we did, showing them the same thing. And after a while, it was like, wow, I think, if we work together, we can really do something big here. And a couple thousand units later, it was about adding the value, and I ended up being the money guy. I ended up, mm-hmm. Bringing the investors and bringing the cash. He's more of a boots on the ground. He does all the due diligence. When we tie up a deal, he does, he goes out, sends his teams out, and really makes sure that it's a property that we want. And at the same time, he's also a property manager. So he only manages our properties, but he's a very good property manager. And it was just a really good fit. He brings the value in that he kind of does the work, and he's a physical presence in Memphis. And I bring the value and I bring the money, and it's worked out really well. No,
that's fantastic. I mean, you make a really good point. And now I just want to clarify that for the listeners, because a lot of people feel that when they're brand new to this business, that they got to start small. They got to buy, they got to work their way up the ranks, right? Before they think about doing a 92 unit or 100 unit type deal. And, who in their right mind, what big, large apartment operator in their right mind would ever want to partner with me? Like, what can I bring to the table? Well, obviously in that scenario, you brought money to the equation the first time around, at least, right? I mean, you were the money guy for that very first deal. You stroked the check. Now, those that are just getting started, they might not have the money to stroke the check, but there's other things that you can do to bring value to the table. Let's say that this large apartment operator that you partnered up with, let's say that he was having troubles with deal flow, right? Let's just say that he reached a point where he literally wasn't finding more opportunities. Maybe he was only buying stuff that was for sale on the market, and he didn't know how to find anything off market. He didn't have good broker relationships or anything like that. Maybe there's a value that you could have brought to the table if that was the problem of being the deal finder guy. You going out, pounding the pavement, building the relationships, and understanding how to evaluate a good opportunity that fits his criteria and presenting it to him. Maybe you form a partnership that way to where you get a small minority role in the deal for bringing it to the table. There's many different ways that you can add value to somebody. You don't necessarily need money to be the one, or to actually be the value in the equation. And because I know a lot of people getting started don't have the money. You happen to have the money, Dave, from your other businesses. But I just want to clarify that point, because I think that's very important. Because now you've got a you've got a relationship and you've got a partnership that is very complementary to each other now. You guys bring a ton of value to each other, and you've done big things. You just mentioned that right now, I think you guys are over 2,300 units, and you got multiple others under contract. So, and that's in a very short period of time. So that's since what, 2009 that you mentioned you bought that first deal? Okay, so fantastic. So that's awesome, man. Congratulations.
Thank you. And that's absolutely right what you were talking about the value part of it. Because there was times 10, 15 years ago when I was up to my ears in business, and my focus was business and growing my business and all that. And the truth is, I would have loved to have access to a guy like me back then. Mm-hmm. So if I'd have had somebody like me come to me with a deal saying, hey, this is the deal, this is the way that you can, get cash flow, this is, we're buying these properties in up and coming areas and, strong cash flow with a really good chance of some real appreciation. I would have loved that. So, obviously now I'm kind of, most of my businesses have kind of, really stabilized, and they're not as high growth mode. They're not as much. They don't take as much of my time day to day, and I've got some good people around me. But yeah, back in the day, I would love to have somebody out there on the street, finding deals, putting deals together, doing the due diligence, bringing me ways that I can invest my cash and make money without being real active in that space.
Mm-hmm, absolutely. Okay, so the one big question I had that popped in my mind when you told me that you became the money guy is, prior to syndicating your first deal, there's a first time for everything, right? There's a first time for everything that you do in your entire life, and so syndication can be it can be a complex thing. And so, talk to me about how you educated yourself on putting together that first syndication deal and any of the bumps that you encountered along the way and how you pushed through them.
Well, I anytime early on, when I was thinking about, okay, so I can get into this multifamily deal. I mean, at that time, it was my money, and I thought, hey, worst thing that can happen to me is I can lose the money. It wouldn't be a lot of fun, but it's not the end of the world. I mean, I can live with it. Making money and with the entrepreneurial skills that I had, I was never worried that I couldn't turn around and make it back and make more and get in the game again. But when I thought about investing other people's money, it scared the daylights out of me, and I was just like, you know what, the worst thing that I could, and probably the thing that would keep me up at night is taking investor's money and losing that investor's money. And so when I thought about that, I mean, it really did. It kept me up at night. That thought when I was, getting into that business. And so I made up my mind to just surround myself with the best people that I knew that were in that game, in the syndication business, getting around mentors. And at that time I was, and still am, I'm kind of a loyal real estate guy, and I joined their syndication mentoring club, and I joined it with the with that intent, was like I got to get some really good people around me to help me avoid making mistakes, to show me the ropes, to show me the shortcuts, to hook me up with the right people, whether that be legal or whoever that may be. And I was part of the syndication mentoring club for 3 years. And I just actually graduated from that kind of, less than a year ago, and now they brought me on as an advisor to the mentoring club, which is kind of fun. But just getting around the right people and getting mentors around me that knew that space well was huge for me.
Okay, great. And you haven't stopped with the multifamily space. You've moved your way over into the resort development space. Tell me about that a little bit, because that's a really far reach. At least in my mind, that's a very far reach from multifamily investments.
Well, to me, I'm much more interested in the partners or the players in the deal, who I'm doing the deal with, than I am about the asset itself. And I mentioned the real estate guys. They got me hooked up with the guys in Memphis, and I started kind of seeing a theme of, the people that they introduced me to, were just, really good people and liked doing business with them. So they took me to Memphis, hooked me up with the team there. Soon after that, they said, "Hey, we're doing a deal in Belize. You got to come see it." And I was like, "Well, if you guys are involved, I want to see what it's about." And that's how that got started. And I went there in 2012, and I have been involved ever since. And I was able to team up with. I was really good friends with the developers. I teamed up with them, those same people that hooked me up in Memphis, and it's when I find a team that I like, that I trust, that have a good track record, I'm much more liable to just invest with them over and over again than I am to, invest with them and then go look for somebody else and go look for somebody else. I mean, if I find a good team, I'll just invest with them over and over again. That's sort of one of my rules.
And so you're primarily a capital guy in the development deal as well. Is that what your primary role is raising capital for these deals or for this development deal? Okay.
Yeah.
Okay. And then so
it's been a fun journey. It's we started, it was just dirt when we started. Now there's 200 homes built. And just about a half a year ago, back in June, Hilton came aboard and branded us, and we're now a Hilton resort set to open in the spring of 2017. In fact, we just had our soft opening in December last month, and the grand opening for the grand opening with Hilton is in the spring of 17.
Oh, cool. Very cool. Well, congratulations. That sounds exciting. And so by default, do you get a free place to stay whenever you go down there? I mean, is that part of the of being one of the main guys?
Well, I really don't need a free place because I own so many of those 200 homes, but I certainly do have a place to stay when I go down there. Yeah. Sure. In fact, last winter, our family moved down for 2.5 months, and you mentioned the winters in Pennsylvania, and totally agreed there. So we packed up and moved to Belize for 2.5 months last winter.
Very cool. That sounds exciting.
We're about to head out of here. We're about to head out of here in a couple of weeks. So I'm looking forward to that again.
Let's go back down. Okay, cool.
Yes.
So not only real estate, but you've got some other businesses. I was looking at your profile, and you've got a company called FreshMushrooms.com. You've got looks like you wrote a book for the Dummy series, which is building chicken coops for dummies. So tell me about something like that's kind of interesting, right? In its own right. So you're a professional chicken coop builder, and then Zook Cabins as well. Looks like it's another one of your businesses. Can you just really briefly touch on each one of those and what they are?
Yeah. So mushrooms first. The mushroom guys were actually customers of mine in the modular building business. They're a great group of guys that were. I mean, they're growing like 20 million pounds of mushrooms a year or something like that. And they were doing it all wholesale. So I went and told them and said, "Hey, I'm the retail guy, man. We need to get these on the street and we need to be able to ship door to door, fresh mushrooms, delivered to your door in 24 hours." And so that's where that idea came from. As far as the modular building piece of it, our business kind of progressed from building just a regular storage shed to going a lot bigger in the last 10 to 12 years. We've taken it from building just regular storage sheds to building 2-story prefabricated buildings that get built in 2 pieces, and we can deliver it in 2 sections to a customer's property and have that 2-car garage, 2 stories tall, have that built in, a few hours. So 90% of the work gets done here at our shop. We put it on, we put the modular sections up on a truck and trailer, and we take it down the road, and a customer can be, they can go to work in the morning and come back that evening and have themselves a 2-car, 2-story garage on their property. So that's a lot of what we do. And that whole thing that came along in 2008, 2009, we had to adjust and we had to adapt and we had to get the customer what they wanted. And it was about that time that we introduced our chicken coop line, and that whole wave of that period of time really rattled a lot of people. There was people that a lot of people that were kind of dependent on the system, and they, when 2008 came along, they were made aware of that, and there's a lot of people that had started thinking, you know what, I should probably become a little bit more self-sufficient. And so there was this whole, and chicken coops and raising chickens and, you know, whether it was for meat or eggs became part of that whole thing. So there's this whole like wave that we got in front of, and we've got chicken coops, you know, in all the lower 48 states. And we kind of became the number one chicken coop people. And then I was approached by Wiley to write the book. And that wasn't something that I really set out to do. It just kind of fell in my lap, and being that we were doing it, and it was like, well, yeah, I guess that would sort of make sense. And so that's how that happened.
Okay. Yeah, you saw the opportunity, you jumped on it. I love it. True entrepreneur spirit. So I want to shift back to the real estate now, and there's a few questions I want to ask you since you are primary. I mean, would you consider yourself primarily a multifamily guy? Like, I know you're doing this development project down in Belize, and you've got these other businesses, but it seems like large majority of your investment that you have, or the time and the business that you have built is multifamily properties. I mean, you've got 2,300 units and multiple others that are under contract. Give me an idea of like what you guys look for. I mean, would you consider yourself value add investors? Are you looking for just stabilized properties? Give me an idea of some of the properties that you've bought recently and what they look like. I mean, types of returns, cash on cash returns, and what excited you about them. Just so we can get a feel for what your investment parameters look like.
Well, back to your original comment about what we're investing in primarily. I mean, here's the thing. I primarily okay, so we have our base down in Memphis, and I've got a great team down there, but I'm not opposed to going outside of the multifamily space. I'm not opposed to going outside of Memphis. What I am opposed to is going outside of sort of people that I know or like or trust, or your chances of getting me to invest in a deal, if you're cold calling me, pretty much slim to none. But there's a couple of things that we really look for in an investment. One is cash flow. The other one is obviously appreciation, but I'm also very aware, because this is kind of how I got driven into this space to start with, is I had a tax problem. Mm-hmm. So I'm very aware of depreciation and how we can use that to, keep the money that we're earning. So just recently I got involved in a portfolio of ATM machines where we buy a big portfolio of ATM machines and place them, and it really fits into that cash flow model. It really fits into that depreciation model. I mean, you get really aggressive depreciation, but the thing for me that's the most important is who the guys are that are involved. Who are the guys? Their track record. Do I know them, like them, trust them? Do I know people that I've done business with? So that is although I'm really active in the multifamily space, and I'll get back to your question about as far as cash flow and all that. Although I'm really active in that space, I'll go into other asset classes, but they got to kind of fit that criteria of cash flow, tax, tax protection,
sure,
and all that. Sure.
Okay. ATMs. So I want to hear a little bit more about that, if you don't mind. Just maybe a minute or two
Sure.
about an ATM business. Honestly, I don't even pay attention too much anymore. But are there that many standalone ATMs sitting around that are actually privately owned? I always thought that majority nowadays are actually owned by banks. Is that not the case?
That's what everybody thinks. It's just I guess it's the thought that it's a machine that delivers money, so that would be directly correlated to bank. But no, the majority of ATM machines are owned by private investors, venture capitalists, equity funds, private groups, and it's just. I mean, the way that we set it up, the way that it's set up on our end, when somebody swipes the card and gets the cash out, you get a piece of that transaction. Mm-hmm. And, whether that costs $2 or $3 to pull money out of the machine, you get a slice of that. And so it's a pretty simple concept. It's a strong cash flow investment for sure. And it comes with really strong tax incentives, 5-year depreciation schedules, or if you do it, if you set it up where it's Section 179, you can even get even more aggressive than that. But it's just really good, strong cash flow, and good tax protection.
Okay, good. Yeah, I don't want to digress too much from real estate talkers since we are primarily a real estate show, but that is very intriguing. I'd love to talk to you more about that. Maybe we do another show or something like that on ATM investments. But let's get back to your multifamily investments. Give us an idea of what you look at. We've got our own set investment criteria when we look at mobile home parks. We love value add stuff. We love buying distressed properties and turning them around. Some people hate that type of investment. So give me an idea of what your typical investments are, what's attractive to you today as far as a multifamily investment goes.
Well, that's exactly what we do as well. And as if you're going for something A class with no issues right now, I mean your chances of making any kind of attractive returns on an asset like that is slim to none. But a typical property that we'll buy is, number one, since we have such a strong local team, we love to hear when we go to buy an asset that asset is owned by an out-of-town investor group. That to us, we already know if that's the case, most likely they're paying retail for third-party vendors coming in doing all their maintenance stuff or most of their maintenance stuff for them. There's just really what we like to see in a multifamily project is we love when something's 80 to 85% occupied, owned by an out-of-town investor group. We don't like to get into a lot of heavy rehab stuff, but if there's renovations, fixing the parking lot, fixing the softened fascias, carpet paint, just heavy touch-up stuff, we love that kind of stuff. Mm-hmm. And again, back to the strength of the team. Steve, our broker down there, he's him and his small team of like 3 or 4 guys are involved in almost half the transactions in multifamily in the entire city.
Wow!
So he belongs to all the organizations that the ones that really matter to an investor. Like he'll know what big infrastructure projects are coming down the road in 2 to 3 years, and so he knows where to find the deals where kind of in the path of progress. So not only do we like the deals that have hair on them and need some tender loving care, and we can get in there with tough management to really get things turned around, but we like to be in the areas that are kind of up and coming and have some potential for appreciation.
Yep, gotcha. So you like the deals have some hair, but not the ones that have full long beards, right?
right.
Yeah.
Well, and the other way we really add value, that's something that's really worked well for us, and this may you may be interested here as well, is there's something happens when people just behave different when they know they're being watched. And so we all of our properties that we own in Memphis have what we call our asset management system installed. That's one of the first things we do when we go in and buy the property is we'll spend another $150,000, $200,000 installing a very high tech system that's got audio and visual. It's a high tech surveillance system, and you can go as far as, let's say Mrs. Smith is late with her rent for 2 days. You can zero in the camera to her door. When that door opens, it notifies the front office. You can get on the speaker and say, "Hey, Mrs. Smith, you need to come to the front office." I mean, it's helped us in so many ways. It's helped us in rent collection. It's helped us. I mean, people just behave better, and you don't have to. If there's violence or drug activity or troublemakers on the property, they'll move on their own. You don't even have to kick them out. They'll move on their own. And so neighboring properties know that your property is the only one in the block. It's, under surveillance 24/7. The whole neighborhood knows it, not only your own tenants. And it changes everything. It's just helped us to really operate a lot more efficient and clean the place up so much quicker.
That's quite interesting. So, were you exaggerating a little bit when you said Mrs. Smith hasn't paid rent yet, and you can zero in on her door, and when you can see that, you get a notification that door opens, you can talk over a loudspeaker? Or is that a little bit of an exaggeration?
No, not at all.
Oh my gosh.
No, not at all. In fact, from my laptop here in Pennsylvania, I could see a kid walking on the sidewalk, and if he dropped his popsicle wrapper on the sidewalk, I could talk to him, tell him, hey, listen, buddy, you need to pick that up and put it in the trash. It's that's how advanced it is. Yeah, and that's happened already. Just more as of when we were kind of testing out the system or whatever. But people soon, the kids know that, the adults know that. And the thing is, the good people love it. The good tenants love it. Their cars are safe. Their kids are safe. They don't have to worry because they know that they're being watched. The bad people hate it.
Yeah, I bet. Well, the bad people would move out. They hate it. They move out. They go somewhere else where they can be bad. That's very interesting. Yeah, I'm sure that probably freaks people out at first. Hey, Johnny, pick up that wrapper that you just dropped. He's like, oh my God, where'd that come from? Someone's speaking to me out of the clouds. So interesting. Well, I want to ask you a question that I always like to ask all the guests we have on the show, and it's going to put you on the spot just a little bit. And you've been doing this now for a number of years. You've owned multiple different businesses. You've been you've been a real estate investor for a number of years now, a very successful one at that. But if you could go back into year one, when you're just first getting started, give yourself some advice after knowing what you know today. What would that advice be?
I starting out in this business, and I'm really an optimistic guy. So I have the tendency to think that there's gold under every rock. And if I were to live my life over again, and from an investor's perspective, I would say just make sure that you invest with good people. Forget about the asset for now, but just make sure that you invest with the right people. I mean, I've done a deal in Memphis with another partner, and at that time I wasn't a syndicator; I was a syndicatee, and I got involved in a transaction where I was the only investor. It's kind of to my fault. I mean, this deal was supposed to be really good, and I got emotional about it. And I ended up being the only investor in this syndication. And I brought $750,000 to the table and ended up losing most of it. And
oh my gosh!
So it was a situation. I mean, I've learned some lessons like that along the way, and I would say if I were to leave any, if your listeners take nothing but this home, it's invest with the right team and do your homework on the team much more even so than the asset itself.
Mm-hmm. So, I mean, what would you have done differently then? What additional homework could you have done that might have swayed your decision to even get into that investment in the first place?
I tend to just trust people and believe people, and if you tell me something, unless you kind of take me across once, I believe what you tell me, and I probably didn't do enough of due diligence on the guy, on my partner, and look at his track record, and talk to people that invested with him. And the other thing is, my first time doing a deal with this guy, I probably should have just went in with $100,000 instead of $750.
Yeah.
And tested him out a little bit, tested the partnership, and because when it all comes down to it, if I'd have got in with $100 to try him out, that would have been the last deal we'd have done because the deal didn't work out. Mm-hmm. And it just try out the partnership and just really make sure that you are comfortable with your team, and then go bigger.
Okay. I mean, do you mind me asking what happened with that deal? I mean, what went south with it that made you lose that money, and how'd you lose it? I mean, was it a multifamily asset that you invested in? Is that what it was? Yeah,
it was a 72 unit building. It was a situation where I think it was just a lot of incompetence. I think it was a situation where the guy kind of bit off more than he could chew, and we were supposed to have these 70 units, and this was a heavy rehab job.
Okay.
Probably something else that I should have, kind of stayed away from early on. Get into more of a solid cash flow deal. Mostly just, I got into, this was a heavy rehab job, and that's another thing. Going in with a new partner. I should have probably picked something a little bit more stable, something that was cash flow and something that wasn't a total turnaround. But yeah, it was supposed to be a situation where we get so many units turned in a year, and we get the thing stabilized in years, 3 and 4. While years 3 and 4 came around, there was only, 8 units fixed up or something like that.
Oh my gosh.
It was pretty ridiculous. It was,
wow.
Yeah, it was pathetic.
That's a failed job right there.
Oh, it is. Geez. It is. But you know what? I learned my lesson. Luckily, I've learned a lot of these lessons. I mean, I'm not that old yet, and luckily, I've been able to make these mistakes when I was still fairly young. So I've taken my lickings, and I'm sure it's not the last time I'll ever lose money, but I've learned a lot of lessons along the way.
So is that a leverage deal? Is there a bank involved as well, or was that an all-cash raise that he did for that purchase?
That was an all-cash raise.
Boy, so he really didn't have an incentive. He didn't have anyone with a cattle prod behind his butt saying, "You better get this done, or else it's going to be even uglier than what you think."
Right.
Once the bank kicks in gear. Jeez. Okay. Yeah. Well, I'm sorry to hear that. That's but hey, you live and you learn, right? You're still here today, and you're a stronger investor because of it. That's all that matters.
Yep.
Okay, well, now, Dave, this is where we'd like to enter into what I like to call the Golden Nugget segment of the show. And this is kind of where we're going to wrap things up for the day. And if you could leave our audience with just one last final golden nugget of advice or wisdom that may inspire and motivate them as they progress in a real estate investing career, what would that one last golden nugget be? And just so you know, this can be anything you want it to be. It could be your favorite, your motivational quote, some core principles you live by, success habits. There's no wrong answer here.
Well, I think if you go into it, I mean, it's not a bad thing to go into it with having a financial goal. In fact, that's why most of us do it, invest in real estate. But from a syndicator's perspective, I remember when I did my first deal, and I needed to raise $850,000. It became about me. It became about me having to get this deal done. And I know when I went out and talked to investors, it was almost panic mode because I didn't know if I could do it. And so I kind of shifted that in the last couple of years to where I made it, when I go out in the street, it's not about me. It's about the investor, and it's about getting that investor a return. And you mentioned earlier about adding value to my partners. Well, I look at it like I'm going out and doing a deal, and I'm going to add value to guys in my community or guys that come around and want to get a good return. Maybe they're in the situation where I was 10 years ago, and they're building their business and don't have time to go out. So I would just encourage someone, especially if they're going out to syndicate and put deals together for others, is what? It's not about you. It's about the people that you're bringing in to the deal. It's about adding value. And I number one, it becomes a lot more fun, and it becomes easier as well because people can sense that attitude.
Mm-hmm. No, that's great advice. I mean, at the end of the day, it really is your fiduciary responsibility to your investors come first. I mean, they need to be your primary objective. You need to take care of your investors. And I think if you go into a capital raise thinking that way, with that mindset that you're out there working in their best interest, you want to find them the best return for their money. You want to put their money in the best investment possible. It's a lot different than like you said, go out there in panic mode to saying I got to make this happen. This deal is going to die if I don't make this happen. When it's like I, it becomes very difficult. But when you really shift your mindset to thinking about them, how can I help them? And knowing in deep inside that like really the opportunity that you're sharing truly is one of the best places that they could potentially put their money. There might be a few other better places, but not really, not that they know of. I mean, not that any of us know of at that point, because the opportunity you have at hand, it's better than any other options they have at that given time. That's how you have to be thinking. That's how your mindset has to be. So that's great advice, Dave. Well, for our listeners that are out there that want to get in touch with you, that want to learn more about you and your company, I've got a website here of the realassetinvestor.com. Is that the best place for them to reach you, Dave?
TheRealAssetInvestor.com. Our email address is info@TheRealAssetInvestor.com. And if you send us an email asking questions or looking for advice, whether that's in the multifamily space or in the Memphis market or whatever, somebody will reach out to you and they'll get back to you. And we're always looking to add value, so reach out to us. The other thing is, if your listeners want to go to info@TheRealAssetInvestor.com/free report, I'll make sure that I have the free reports up on. I wrote a report on Memphis, the market in Memphis, and also wrote a report up on Belize. So if your listeners want to go there and just go to info@TheRealAssetInvestor.com/free report, they'll have access to both of those.
Okay, fantastic. I appreciate that, Dave. And it's been a pleasure speaking with you. I appreciate you taking the time to share your story with us, and I wish you the best success in all that you do. It sounds like you're making waves in everything you do so far, so just keep doing what you're doing. And just, again, really appreciate you having on the show, and you have a wonderful week, my friend.
Well, thanks, Kevin. This was fun. I enjoyed it.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.